Namaste everybody. I welcome each one of you to UDAYA'S classroom. In today's class, we are going to talk about the pros and cons of joint stock company. Come, let's get up with the class. The first pros that we have is limited liability, which means the members of the company has got limited liability with the company. So members also called as shareholders or investors, right? So the investors has got limited liability towards the company. How come they will have limited liability means, see, the members of the company would have invested their amount in the company. So if they have not paid their share amount fully means the balance amount they need to pay. So the balance amount only they have to settle down in case of debt of the company. So they are limited, their liability is limited with their capital contribution only. So say for example, I have invested 5,000 rupees in the company, 3,000 I have paid and the balance 2,000 I need to pay to the company for my shares. So I am responsible or I am liable only for the 2,000. So that is called, the member will be liable up to the unpaid shares of the company. Hope you are clear with this point. So the members need not to worry about their personal assets. So as like sole proprietorship or partnership, members need not to sell their personal property to settle the debt of the company. Okay, so their personal property is free from the company's debt. So only they are liable up to their capital contribution. So this is the welcome note for the investors to invest in the company because their liability is limited. Their personal property is very safe, and apart from that, they have to contribute only the share amount alone. Okay, having understood about the first pros, let's move on to the second pros. Transfer of interest. Transfer of interest means the shares, the members would have been acquired shares from the company, isn't it? So that shares could be sold in the open market or stock exchange for cash. So they need not to get any prior opinion or consent from any other investor. So very openly any shareholders can sell their public company shares in the open market and they can make money, and even in the stock exchange they can sell. Okay, so there is no restriction for them to transfer of interest. So transfer of interest is very free in the company. And the next process, perpetual existence. Perpetual existence means in the company any member can come and go but the company will exist, or any members of the company has got mental illness or insanity or any other problem, insolvency, in the case of death or disease or whatever, so the company will get continuing, it will be functioning, so it will not affect the company's existence. Alright, so the same way the company is formed through law and it should be registered under the Companies Act, so it should be winded up only through law. So and the opening and the closing will take place through law only. So that is the reason why company is called perpetual succession and also perpetual existence. So perpetually it will get existed, it will be continuing. And moving on to the next pros, scope for expansion. The company, if it is wanted to expand further in huge size, it could expand very easily, because if the company in the need of financial resources, it can acquire loans and advances from any financial institutions or lenders or from the public by issuing the shares of the company. So expansion is very easy. They can arrange huge capital in the financial resources. So expansion is very easy. They have got a higher level of scope. And the next pros is professional management. Professional management means the company could appoint professionals for their company. So department wise they can allocate or appoint professionals in order to take care of the managerial affairs of the company. So managerial decisions will be taken care by the professionals because their capital resources would be huge. They can pay very good salary for the professionals. So expertise could be appointed in the company. So professional management also will be very good in the company. So these are all the pros of the company. Now let's see the cons of the company. Cons of joint stock company. The first con is complexity in formation. Joint stock company cannot be formed that much easily. People have to put lot of efforts, more time to be spent, and more legal documentations to be prepared, and lot of procedures are involved to start up a company. So it is a complex process. So person who has got very good knowledge about the company and the legal formalities, they can start up with following all the procedures easily. If not, a professional to be appointed and amount to be spent. So it is very costly thing only to form the company. So complexity in formation will take place. And the next thing is lack of secrecy. Lack of secrecy means the company form of organization cannot maintain any secrecy or confidentiality. Why? Because the company will have to submit some documents to the registrar of companies. So while the incorporation itself, the companies have to produce lot of documents, and even those documents will be published for the general public people also. So many documents will become open secret for everybody. So company form of organization cannot maintain secrecy in the company. This is one of the disadvantage. And the third thing is impersonal lack of work environment. So impersonal work environment means the owners will not have any personal contact with the employees or with the customers. So direct contact will not be there because the board of directors will be managing everything, top level management, middle level and operational level. Lot of hierarchical things are there. So personal touch won't be there with the direct stakeholders. So impersonal work environment will persist in the company. So personal touch will not be there. And the next thing is numerous regulations. Numerous means number of regulations. So regulation, rules and regulations are more for the company. So then and there the rules and regulations will be changing in as per the company's act. So all the companies have to follow all the regulations, and apart from that the companies have to produce more documents, auditing, filing taxes. A lot of regulations are there for the companies, everything to be followed. So their regulations are very numerous. And the next con is delay in decision making. So decision making is not that much easy for the company because the top level management would have taken some decision and it should be passed to the lower level. So when it goes like this, top, middle, operational, decision making will take time. So delay in decision making will take place in the company. So immediately decision making cannot be done. Alright. And the next con is oligarchic management, which means oligarchic means control. Okay. So management control will not be there with the owners. Even if we say the shareholders will become the owners of the company after they acquire shares from the company, but they cannot have direct control over the managerial activities. So they cannot participate in the day-to-day activities of the company. So their representatives, board of directors only will be attending the meeting. Even in annual general meeting, only few members, some members only can attend the meeting, even though the shareholders are spread over the country. So the management control will be with the board of directors only. At times it may not be with the public interest. It may satisfy their personal interest too. So the control will be with the board of directors and the top level management only. So control of the management will not be with the direct owners also at times. And next is conflict in interest. Conflict means what? Fight. Fight in interest in the sense the stakeholders of the company, each and every stakeholder will have different interest. For example, employee may be in the need of higher salary, and customers, they will be final consumers, they will be expecting higher quality of products. So stakeholders means the people, those who have involved with the particular company, right? So each and every stakeholder will have different interest. It would result into conflict. Okay, so satisfying all the stakeholders will be a difficult task for the company. So these are all the cons of the joint stock company. How can we conclude this joint stock company? This form of organization will be suitable for the people, those who need huge financial resources. So the capital, they need huge capital means they can go for the company form of organization, and they can start up by following so many rules and regulations, procedures, everything. So it depends upon their capital formation. So if they need huge capital, this would be ideal to select. Okay, having understood about the joint stock company pros and cons, we will end up the session today. I will meet you in the next session with a new lesson. Till then, it's bye from